When are rates going to go back to 4? That's the number one question I get. So let me explain this to you in a nutshell. The reason why rates got to 4% in the past was the Federal Reserve stepped in and they basically bailed out the economy. Let's go through this. And I'm going to post this on my website. It will be under the blog section here in a minute. But let's go through. Mortgage rates have only dropped sharply during periods when the Federal Reserve used quantitative easing. Large-scale asset purchase to stabilize and push long-term rates lower. So here's what happened in the past, or the Federal Reserve stepped in, and what they did is they bought these things up in the tune of $40 billion a month. $40 billion a month is how much of this they were purchasing. What is it? Well, if you're new to my channel, this is a mortgage bond. This is what we follow each day. All you have to understand is that number up through there. That's the price of the bond. As the price goes up, rates come down. So what happened when the Fed jumped in and bought $40 billion a month of these things? Would jack the price up to the moon. It would jack up any price of anything. If you had somebody buying $40 billion a month, look at Bitcoin. Okay, so that's what happened. That drove rates down to historic levels. Let's go over and I can show you kind of when these happen. So the first round of QE was in 2028. This was that bubble, the housing bubble everybody uses for reference. Financial crisis, frozen credit, housing market crumbled. They actually came in and bought up the markets and plummeted rates down to about 3 or 4%. And then we had November of 2010. That was another aspect. But then here's when it really happened, the pandemic, or COVID. When COVID hit, the government, the Fed, jumped in and bought up everything that they could purchase, bringing rates down to, I have a 2.625 rate on my home. That's how low rates got. I don't think they'll ever get there in history. If you go down through here, it's going to take just something just outstandingly bad to really push rates down. Why it's different now? The Fed is in quantitative tightening. Well, they just ended that, but they really haven't reached back out and started quantitative easing again, and I don't think they're going to. There's no need for it. There's no pandemic when it comes to financial crisis, and this is nothing near you saw in 2008. Mark my words when it comes to that. Without a new scale, large-scale MBS purchases, another drop to 4% would basically require a major economic shock. So we're not going to see that. I know times right now are bad, but they're not as bad as these were. Okay, so that's that part of it. The relief we got this week was right through here, the jobs market.